Hi guys, welcome to yet another video of Microsoft ERP Beginners Tutorial Series. So as promised in the previous episode, in this episode we are going to get started with the foreign currency reevaluation process in Microsoft Dynamics 365. With that note, let's get into the episode. Hi guys, as discussed, we will be discussing about the foreign currency reevaluation process today. So if you are not from the finance background, if you are especially an SCM consultant or a consultant of some other module, then normally for us, it's slightly difficult to understand the foreign currency revaluation process. Even though there are a lot of blogs in this topic, while reading it, it's slightly difficult because a lot of financial terminologies and other things are used, so that makes it difficult for us to understand, especially for those who are with a non-finance background. But you all know about our TikTok series. So in this particular TikTok 365 beginner series, we are trying to simplify all the processes, and we are trying to explore both the finance and non-finance topics in a lot more simpler way. So likewise, I'm going to first try to explain you the concept of foreign currency revaluation with a simple example, and then once we understand the concept, then we will get started with the demo of the foreign currency reevaluation process. So let's first see what is a foreign currency reevaluation process in the PPT. So we all know that during this entire series, those who are watching this series from the episode 1, we did create a new legal entity in the episode 1, and we are using the same entity until today. So we are assuming that our legal entity ADC Motor is, like we also seen in the previous episode, is an entity which is an Indian entity. So all the accounting currency or accounting transactions are all happening in Indian rupees, because we are considering this company to be an Indian company. Let's also do an assumption that we are handling a foreign vendor who is a US vendor, and this particular foreign vendor, with this particular foreign vendor, we are doing a transaction in US dollars. Okay, so since we are doing a transaction in US dollars, we also set up this vendor with a foreign currency USD. We have also seen this vendor in our previous episode. So this vendor, whenever he issues an invoice to us, he will try to issue the invoice in US dollars. So in this case, the vendor is actually issuing us an invoice as of January 15th, and the invoice is issued for 1000 USD, $1,000. And on that particular day, we do have an exchange rate set in our system, which is for 75,000 Indian rupees, meaning 75 rupees per US dollars. So that makes 75,000 Indian rupees for every $1,000 on January 15th. So we are entitled to pay $1,000 back to this particular vendor. So we will make a payment on the end of the month, which is according to our payment terms. Let's say that we have agreed with the vendor that we will be making a payment on the end of every month. So meaning on end of every month, we are entitled to make a payment of $1,000 to that particular customer. So if you see this in a foreign currency, the $1,000 is an invoice that we have received from the vendor, and the $1,000 is a payment that we will be paying back to the vendor. So everything looks good when you're considering an entire scenario in the foreign currency. But the problem here is our local or our accounting currency in the ADC Motor is not USD, it is Indian rupees. So we need to make an account, and we need to make sure the balances of all the main accounts are perfect, even in an accounting currency, which is Indian rupees in this case. So the transactions that we are making in the USD, we are converting it into the accounting currency, and we are making sure that the profit and losses that are occurring due to the fluctuation in the exchange rate are posted to the relevant accounts properly. Let's say, for example, on 15th of Jan, the 75,000 is an impact in our accounting currency, which is INR. And let's say that there is a concept of foreign currency reevaluation, which in a short I'm calling it as FCR. So the foreign currency reevaluations are normally run on the end of every period or end of every month. Let's say on the end of January 30, I'm running my periodic task, which is the foreign currency reevaluation. So foreign currency reevaluation tasks always picks up only the open transactions which are not already paid. Open transaction meaning this particular transaction, let's say for example, is a vendor invoice issued and it's not yet paid. So this kind of transactions will be qualified and picked up by the foreign currency reevaluation periodic task. So the foreign currency, when you run the foreign currency revaluation, what it does is it reevaluate the transactions based on the exchange rate that we are giving while running the foreign currency revaluation. That is, let's say that I'm running a foreign currency revaluation on 31st of January and I'm considering the exchange rate of 31st of January. So on the 31st of January, the exchange rate is slightly reduced for INR to USD, meaning it's only 70 INR per USD. So meaning that will give me that only 70,000 Indian rupees that I will be paying back to the vendor if I'm about to pay my invoices on 31st of January. So when I run the foreign currency reevaluation, I will be able to calculate that whether there is a profit here in the accounting currency or whether there is a loss in the accounting currency. So assuming that I'm running the foreign currency reevaluation on 31st of January and the exchange rate on that date is considered, because exchange rate will keep updating on everyday basis. We have seen that in the previous episode. So on 31st of Jan, it's only 70,000 Indian rupees, even though in the USD currency I will be paying back $1,000, but in the accounting currency there is clearly a profit of 5,000 INR which gets credited to my unrealized gain account. Why I say it is unrealized gain? Because it is not an actual profit that my company have created, because I haven't made a payment yet. I only run foreign currency reval, so which means that it's only giving me an estimated revenue or estimated gain that might come into my company if I am happen to pay my payment on 31st of January. So in this example, since my exchange rate slightly reduced from 75 to 70, there is a gain of 5,000 INR, which is actually posted to my revenue account, which is my unrealized, which I call it as unrealized gain. Let's say on 31st of January, my exchange rate is not 70,000 INR, it's like 80 USD per 80 Indian rupees per USD. So in such cases it's 80,000 INR. In such cases, if I am happening to run my foreign currency evaluation, there will be clearly a loss of 5,000 Indian rupees in my local currency, right? So in such cases, it will not be posted to the unrealized gain account, but it will be posted to the main account set in the unrealized loss. So to give you just a heads up, the unrealized gain is going to be your revenue account, the unrealized loss is going to be your expense account, meaning I'm going to use my P&L account for unrealized gain, unrealized loss. So during the gain, the revenue account will get credited, and when there is during a loss, the loss accounts will get debited. Okay. So that is the finance transaction or posting that happens while I'm running the foreign currency reevaluation. And let's say that I'm getting a profit, so I'm quickly deciding to make a payment on January 31st to that vendor. So as soon as I make a payment to that vendor, I will see that once the payment is posted, the unrealized gain will get reversed, meaning since it got credited, it will get debited, and the actual, since it's just a temporary control account, the actual profit will be posted to the actual realized gain account. In this case, of course, it is going to be debited with 5,000 INR. Okay, so in a case of a gain account, I am going to use a balance sheet account. So in this case, it's going to be an asset account, and if there is a loss, then it is going to be posted to a liability account. Okay, so for the realized gain and realized loss, it's PNL, and for the for the unrealized gain, unrealized loss, it's a profit and loss account. For the realized gain, unrealized loss, I'm going to use the balance sheet account in my example. Of course, in your case, you can map any main account based on your business requirement. So this is the concept of foreign currency revaluation. What happens if I'm running a foreign currency revaluation? Let's say in this example, of course, I'm running before the payment. But what happens if I run it for the same transaction after making a payment? Then there won't be any impact, because when I'm making a payment, the profit or loss is already posted to the realized loss or realized gain account. So there is no concept of unrealized come into picture. So as per the definition of foreign currency revaluation, the periodic task will only pick the open transaction. So if you are already made the payment, it's not considered to be an open transaction. So there won't be any impact while you're running a foreign currency revaluation. So this is the concept of foreign currency revaluation. It's a process where all the open transactions which is having the foreign currency impact, the relevant accounting currencies are balanced properly based on whether it's a profit or loss into the unrealized gain or unrealized loss, or realized gain or realized loss main account, based on you're making payment or based on you're running the foreign currency reevaluation periodic task. So that is the concept of the FCR, guys. Hope it is clear. So with this scenario, we will now try to do all the setup. That is, the first setup includes the exchange rate setup, and the second setup is of course the main accounts that we need to tag in the general ledger for the realized gain, unrealized gain, realized loss, unrealized loss. And then we will go ahead and make an invoice, and then we will run the foreign currency reval, and then we will also go and make a payment and see how all of this work. So let's get into the demo section. So now let's try to set up all that we've seen in the scenario one by one. So the first thing is the exchange rate. So let me go to the general ledger module. We've already seen how do we set up the exchange rate type and exchange rate, etc. So here it's only going to be INR to USD. So let me go here. Okay, I think this one, yeah. So let that be there. Let me just add one more exchange rate for today, as per our example in the diagram, which is on the 15th of Jan, is going to be 75 INR. So I'm going to put the exchange rate as 75. So which means that 1 USD is equal to 75 INR for USD to INR. So I'm also adding one more exchange rate for 30th of Jan, and it's going to be 70, that is 70 Indian rupees for 1 INR. Okay, so this is for 15th and this is for 31st. Let me save it, and that's the first setup that I wanted to do. And the second setup is you need to specify the unrealized gain, unrealized loss, realized gain, and realized loss accounts. So for that, let's get into the chart of account and let's go ahead and create those accounts in our chart of account. Let me create the new account, which will be 120 130. So 120 130, and it's going to be the realized gain account, and that's my asset account. So let me, yeah, that one. And I will create one more account which is my loss, realized loss, and since I'm considering the balance sheet account, it's going to be my liability account. So loss and liability, that's good. It's a 2 series, so let me see if it is there. Yeah, that one. And now let me create unrealized loss and gain. So it's going to be a revenue account, so that one, and unrealized gain, save it. Let's see if it is in the ended. Yeah, that's the last one. And we also have our expense account, which is going to be the unrealized loss. So expense is ending at 120, so 130 is the next number, and it's going to be the unrealized loss account, which is going to be the expense account. Okay, and just quick check, this one needs to be changed to revenue, so that's good. Okay, so now we have added all of this account. So now let's go to the general ledger and the collapse all, ledger, and here is the area where you set up the posting profile for unrealized loss gain. These were some account that we have mapped temporarily while we were trying to create this legal entity. So let me now change it to a proper account. So let me just remove this and change the account to the realized gain, which is that one. And this one, let me change it to a proper loss account, that one, and that's going to be my revenue, and that's going to be my expenditure. Okay, so that's done. So once you have tagged all the account based on your business requirement, this will be the account used as a posting profile for posting the loss and the gain. So one more thing I want to highlight here is this will be the default area that will be considered. This account are the default account that will be considered to post the loss or gain while running the foreign currency revaluation process or while posting the payment. It is also possible that if you get into the general ledger, let me show you another area where you can actually tag the accounts currency wise. So if you go to the general ledger module, that one, and the posting setup, the currency revaluation account, so you can get in there. And even here there is a possibility that you can define the main accounts on the currency level. So for example, in this case it's a USD currency that we are handling for the vendor, so you will be also able to set up your main account here. So if there is no main account here, then the system will consider this location. If there is a main account here, then this will be given a higher priority. In my case, I'm not providing any main account here, so the system will go back and pick up these main account, as this will be considered as a default main account. So, and one more very important thing that I want to highlight here is in our example, we did deal with the vendor, right? So meaning here we are dealing with the vendor, so meaning the vendor is issuing us the payment, and then we are vendor is issuing us with the invoice, and we are doing a payment, and we are now reevaluating the profit or loss and posting it into the profit or loss account, right? Similarly, the ADC motor is also dealing with the customer, right? So it will issue an invoice to a customer on Jan 15, and then it receives a payment from the customer maybe on the same date, which is Jan 31st, which is also considering the similar exchange rate, which could clearly be a loss because our invoice was originally for 75,000, but the payment that we are receiving from the customer on the 31st of June is only 70,000, which could be a loss and posted to the realized and unrealized loss account, right? So those are the reevaluation process that can happen in the AR module as well. Our example is only for the AP module, but I highly encourage you to maybe practice this in the AP module first and then replicate it in the AR module, because the concept is the same. The main account that will be considered is also the same, which will be defaulted to the same realized, unrealized main account. So you can also view the impact in the AR module as well. Okay. So likewise, apart from the AP module and AR module, let's say for example, let's say in the AP module, the foreign currency reevaluation is available under the periodic task over here. Under the account receivable, the foreign currency revaluation available in the periodic task over here. And likewise, even in the cash and bank management, if you go to the periodic task, you still have a foreign currency evaluation process to balance against the bank accounts. Likewise, if you are going to the general ledger module, it's also having the foreign currency revaluation process. Here, foreign currency reval, so you can do that as well from here. Okay, so every module you can run the foreign currency reevaluation process. It's not only specific to AR or AP, it's also the cash and bank and also the general ledger module, where you can directly run the foreign currency reval for a specific account. It could be maybe you can restrict the foreign currency revaluation for a PNL account or a main account for all account, or even you can filter it down only for a specific main account range. You can run the foreign currency reevaluation. Okay, so in order to support the module wise, let's say if for your company the requirement is you don't want to post in this case for all the module, irrespective of whatever module you are running the foreign currency revaluation from, the profit and loss will be only posted to this 4 main accounts, right? But Microsoft has recently released a new feature as of 10.0.32, if I'm not wrong. I'm in a 10.0.30, so I will not be able to show you in this version. But if you are having a 10.0.32, then if you're going into the general ledger against the currency, you will find the posting profile setup over here, where you will be able to set up the posting profiles. That is a main account specific to each module. There will be 4 tabs in the system for cash and bank, AP, AR and general ledger, where you can specify your main accounts module wise and also the currency wise. Okay, you have a concept of all and table, and where if you're picking a table, you can choose a specific currency, specific module, and you can specify the main account. So you can have a granular level control currency wise, module wise, if you are using the new feature. So it's worth exploring if you have such a requirement in your company. But anyways, the process and everything is same, just that you have ability to have a much more flexible main account setup. Okay, so in this case I'm not using any new feature. This is just a default area where I set up my main accounts. So that's my second setup. So once I'm done with this setup, then I can now go ahead and create a PO and try to issue an invoice from the foreign company, that is foreign vendor. Okay, but we did create so many PO invoices in past. So I'm going to use the vendor invoice journal that is available in the accounts payable module to directly post the vendor invoice, and then I'm going to use payment journal to directly post the payment to demonstrate the concept of foreign currency revaluation. So in the accounts payable module, collapse all. under the invoice section, you have ability to directly create a vendor invoice without involving a purchase order. So if you are following with me from the beginning, I'm sure that you do not have a journal name created yet, because we never created any invoice journal. So you have to first go to the general ledger module, go to the journal setup, journal names. I have already created a journal name. If you haven't created, just create a journal name called vendor invoice. So that journal name, the journal type should be vendor invoice recording. Okay. I've also created a voucher series to save some time, so that I know that I'm posting the vendor invoice while reconciliation of my vouchers. So I've also changed the voucher for the vendor invoice. And I've also created a journal name for the payment journal, which I will be posting later. So for that, you need to use a journal type of payment disbursement. Remember that you have to have a journal type payment disbursement, or else you will not be able to post the vendor payment. So make sure you have created both of these journal names. So once you create those journal names, then we are now ready to explore the process. So let's go to the accounts payable and create a invoice journal. So let's create our first invoice journal. So you find that when vendor invoice recording journal name here. So choose the journal name and get into the line section, and then choose your vendor. In this case, my vendor is a US vendor, so that's my vendor. That vendor is already having a currency as USD, so in the vendor master. So if I choose this vendor, the currency here, if I refresh it, will automatically change to USD, because the system understand that that's a foreign vendor. Okay. And today's date is 15th of January, so that's going to be my invoice date, right? So I'm going to just put my invoice date as 15th of Jan, where my my vendor is issuing me with an invoice. And according to our example, I'm going to go do a vendor invoice, so it's obviously going to get credited to my vendor account. So it's going to be 1000 USD according to our example, so I'm going to give 1000. And the offset account, I might need an expense account, so let me try to find an expense account. So let me use this expense account. Let's say that it's a kind of an installation charges or the service that my vendor have offered. So I will use this account as my expense account or offset account. So all good. So now let's save this and let's post this journal. And one more thing, sorry, just want to quickly cancel it. One more thing is, we know that our exchange rate setup for $1,000 is 75. So system understands it. So it's automatically telling is my accounting or my reporting currency. It's already showing me the converted rate is, which is in Indian rupees, is 75,000 Indian rupees. So it's already there here at the bottom. Okay. So with that, let's post this invoice. So, okay, sorry, I need to put some invoice number. Let's post it again. So it's posted. So now let's try to reach out to our vendor, which is that one, and check the transactions. And you see that there is a vendor balance getting posted, which is crediting to the vendor, as you can see here. So the balance in the transaction currency is in USD is 1000, but it has been now changed. The balance in the reporting currency is minus 75,000. Okay, it's automatically changed. So this is my vendor balance. So I can even see that there is a voucher which is getting credited to your posting profile account in the vendor, and that's going to be my account installation charges that I have set up as an offset account in my vendor invoice. which is actually getting debited, and this account is getting credited because this is a vendor invoice, vendor to expense. So now let's keep this open and let's go to the next tab, and now let's try to change the session date, assuming that now the current date is changed from 15th of Jan to 31st of Jan. Okay. So as of 31st of Jan, we know that the currency rate I've already set up in the system is 70. So now on the 31st of Jan, we are trying to run the foreign currency revaluation, which is run from here, foreign currency revaluation. So just click on that, and just create a revaluation. We will come to all of this later. For now, I'm going to use the method as standard. Maybe to next video, we will try to do some experiments with these setups. I'll also just turn off the print for now because it will take some time if I turn on the printout. But if I turn on this, there will be a beautiful report getting published to my screen that will show the impact of the realized loss or realized gain that happens. So I'm going to just turn that off for now. So I'm doing it as of 31st of January. Oh, sorry, not this is December. So I'm going to consider 31st of Jan, and I'm also using the consideration date as 31st of Jan. So it takes the exchange rate of 31st of Jan in this particular case. And then let's just run the currency revaluation. So the currency reevaluation is successfully run. For if I choose that particular transaction and get into the transactions, I will clearly see that the invoice number is here and it's as of 31st of Jan, and the impact of 5,000 is registered here as a line. So if you check the voucher, you will see that in the voucher, the 5,000 is actually getting debited to the summary, the vendor account, that is the posting profile summary account, and the 5,000 is getting credited to my revenue account, which is in this case in a form of an unrealized gain account that I have created in the system, which is my revenue account, right? So in this example, there is a gain obviously of 5,000 as we discussed during the example in the PowerPoint. And going back to the screen and going to um, the the vendor transactions, you will also see that the vendor balance, right? Initially in the foreign currency, it was 1,000 USD, but there is no impact to the foreign currency. This is a voucher generated from the foreign currency revaluation. There's no impact on a foreign currency level because it's doesn't matter. 1,000 is issued and 1,000 is invoice, 1,000 is a payment as well, so it's zero. But in a case of a reporting or accounting currency, you will see that the 75,000 was initial invoice booked, but the balance is now is 70,000, which is here, and the 5,000 is actually got credited to the vendor balance. So it's sorry, debited to the vendor balance. So which means that 75 is a credit and 5,000 is a debit, right? So in the total effect here is 70,000, right? So yeah. So this is the impact of the vendor balance here. So meaning the vendor is debited by 5,000 here in this case, and I can even get into the, oh sorry, if I choose the second line, I can even get into the voucher and I can see the same thing from here, which is the vendor account is getting debited, and the offset account, which is the credit, is actually happening to your the revenue account that we've already just now seen. So that's the impact of the foreign currency revaluation. So now let's proceed further with our scenario, where I will be assuming that it's still 31st of January and I'm going to make my payment. So going into the accounts payable and collapse all payments, vendor payment journal. We will cover about the vendor payment journal and maybe invoice journal, other things in deep detail, but this is just a quick show of a process of how we can book a invoice without a PO and how we can pay the vendor directly from the payment journal. Okay, but we will explore the payment journal and vendor invoice journal, everything in a detailed manner in a separate episode, so don't need to worry about that. Okay, so let's just quickly create a vendor payment, and we know that this is a journal name that we have created during the beginning of the episode, which is vendor disbursement, which is a journal name type. And just get into the lines and make a payment. So choose your vendor, which is your foreign vendor, and your offset account is going to be bank from where I'm going to pay. So bank, it's going to be HGBC, sorry. So I need to make sure if I have enabled the, allow transactions in additional currency. If it's not, it's turned off, then you will get an error while trying to post. So now it's good to go. As soon as we save it, you will see that the settled transactions is enabled. So from here you can see the invoices against that particular foreign vendor which are unsettled right now. So this is only one invoice because the new vendor at the moment is unsettled. So I'm going to mark that and say okay. So I see that it is in the a USD currency, and it is showing me 1,000 as expected. Even though the payment is made for $1,000, the impact in the local currency, which is only 70,000 Indian rupees, that I may need to pay back on my reporting currency point of view, but here it is 1,000 USD as expected. So now I can go ahead and post this payment journal. So the payment journal is successfully posted. So once the payment journal is posted, if I go back to my vendor, that vendor, and check the transactions of that vendor, I will see that the previous transactions of the unrealized gain will get reversed, and everything will be posted into the realized gain. Okay, because I'm posting on the same date in this example, but when you are practicing, you can even try to do a payment on maybe a different date, not on 31st of Jan, maybe on 1st of February, where the exchange rate is going as a loss for us. So in such cases, everything that got posted in the unrealized gain account will be reversed, and the system will actually post to the realized loss in such cases. In this example, as we made the payment on the same day, the previously posted unrealized gain account, that will be reversed and that will be posted to a realized gain account, and also like the impact on the vendor balance, like it got nullified, and again the vendor balance has been posted, and the payment, it also gets debited to the vendor with 70,000. So even that got posted. So these are the impact within the vendor balance after paying the payment journal. So the total impact on the main account for the unrealized gain is zeroed, and the balance of the realized gain account at the moment is 5,000. So just to show you that, if we go to the um, on the trial balance, since we created this account newly just now, it is easier for us to see that in the trial balance as well. So if you see, this is my unrealized gain account that I have created, which is my revenue account in this case. It is debited and then later on credited after I make the payment. So the balance is zeroed. And if I go back to my realized gain account, which is I think an asset account in this example, so it is being credited, and it is because the vendor got debited and this gets credited, and it is having a balance here. So this is the impact of the foreign currency process, guys. Hope I explained you and you understand the concept of foreign currency revaluation. But we will explore this more with few more scenarios in the next episode, so you understand better about various other parameters that we are having in the foreign currency revaluation process. Until then, bye and thanks for watching this video.